Hey, good morning, everyone, and welcome to the PivotBoss Pre-Market Report for November 7th, 2016. I am Frank Ochoa, aka PivotBoss. Here's a look at the daily time frame of the ES right now. What you're seeing is a large gap up today. We closed Friday's session about 81 half. Here we are trading 07 quarter, 07.75. We're trading 20 plus handles, 26 handles higher than Friday's close. We've also gotten back above the bottom of this key range, which spans from 2190 down to 2100. Midpoint of that range is 2144.75. So there's a couple of opposing forces at work here. Obviously, we've had lower highs and lower lows here over the last couple of months. Been very slow developing, rounded top pattern. But we're now breaking back above that prior support. So these late bears here could be trapped, and a pullback into 2100 could offer bulls an opportunity to step on the gas and squeeze these late bears back toward the midpoint of the key range at 2144.75. That's one play right here where if you are a confident bull right now, you'd want to defend that pullback into 2100 and keep this area bid for a shot at squeezing back to 2144.75. Now, it's hard to be a confident bull at this moment. Obviously, every pullback has been a buying opportunity over the past several years and even earlier this year and throughout. But we have had a period of lower highs now. And pulling back above 2100 here, if prices cannot keep that area bid and prices start to push back below 2100, this is just another pullback in what could become a larger downswing ahead. Perhaps back toward 1981 half. So we have this 1981 half that's right here. It's been a major key level. It's the bottom of the Brexit low. So if we cannot get back above or remain back above 2100, if we cannot keep that acceptance, we could be looking at more weakness here as this becomes another lower high in a downtrending move. So right now, a couple of opposing forces to watch here as we play the early portion of the week. I'm going to be watching 2100 very closely. And I'm going to be watching to see if responsive bulls come in, or if bears are able to push through there and start to force another move lower. Now, instead here on an intraday basis, that's the swing outlook. But on an intraday basis, really, what you're seeing here is price basically trade at highs after a big gap up. Anytime you get a large pro gap like this, the tendency is for price to just digest that recent gap. So you usually see some sort of trading range develop, which means the current strategy is to fade new highs and fade new lows. That's the current strategy right now. So you're going to be looking to fade the edges as price develops in this area. Additionally, if you were to pull out a little bit farther from this chart, you'll notice that there's a major LVN in this chart that you can plainly see basically between 2110 and 2120. And so right now, we're basically filling out that LVN, or attempting to, which is probably the right approach at the moment. So I would say right now, any pullback into 2100 could offer a short-term buy back up. Any push into 2112, 2113 could be an opportunity to fade it back down. So that's the current course of action as we head into RTH Monday. Let's take a look here at crude oil now. Here's crude. We're going to bring up a PivotBoss pivots style here, and looking at this one now, this has offered a significant rejection. One thing we talked about was 52s being a significant key level on many different fronts. Our trading room knows that these 52s is a major composite low volume node, a higher time frame key level, and it starts the next price distribution up to 62. So if crude oil could ever find acceptance above 52, it would open up the next price distribution from 52 to 62. In failing to do that, the idea was that we likely come back to value here, and perhaps this is where they want to defend. If not, you likely auction back to the bottom of the now developing larger trading range. So this may not be done for crude oil here. We may see a move into 39s at the bottom of the range before we see bulls really come in and step on the gas. But short term, we have 43s. 43s is a major key level. Stops came out there before the recent rally. Bulls have defended on multiple occasions with great reversal signatures. So that's a level to watch. Right now we're pulling back after a major sell-off, so I would think that this pullback offers a short-term selling opportunity that will test 43 and perhaps lower, but 43 could offer a first-time buying opportunity back up. So watch 43 for at least a short-term intraday bounce, if not a larger swing move. Right now, pullbacks could be a selling opportunity for a move across the range into 39. So very important territory here for crude oil. You can see what I mean before. Here's the price distribution which we're currently in, from 39 to 52. Above 52 opens up 62, right? So you have 52 to 62. You have 39 to 52, and then you have everything below 39, which takes you into 26. So those are the three price distributions we have for crude. Right now we were rejected at 52. That implies a move into 39. Bulls would want to pick it up here and bring it back up to 52. That's the longer term outlook, at least as we head into the end of the year. And so we have to follow this and see how crude continues to play out according to this theory. All right, let's take a look at the intraday time frame. On an intraday basis here, you can see that price has pulled back toward 45s. 45 is a key level to watch. Very important level that had been support, and now you can see after taking it offered, it has now become a general area of resistance. We have had a little bit of a pattern of higher highs and a rally bottom here, so above 45s could squeeze even higher, perhaps back to the 46 MC VPOC, or right here, 46.69. So squeezing back above 45s could offer us short-term relief back into these high-value zones, because that's CVPOC and MCVPOC, and right now we've been trading lower until we found recent rejection. So above 45 could squeeze very nicely here to begin the week. Failure to get above 45 suggests that it's business as usual. Bears defending. That would suggest at least a rotation into 43.80 and perhaps a retest of the previous week's low. So right now, 45 is the major pivot to watch for crude oil heading into this week's trading. All right, let's take a look at gold futures here. Here's a look at gold. Let's look at the higher time frame with the PivotBoss pivots. There it is. We've nailed gold pretty nicely, but I'll be honest, the price action hasn't been the best, and that's kind of thrown my confidence off on some of these moves. But nonetheless, the analysis has been perfect. It's 1250 to 1252 was our area. We thought this could be a rejection signature, but we had to be careful because of the indecision on the bar, and we were right to be careful. You know, we were right to be careful. 50 to 52, I mean, look how long it took just to even get going. It took the better part of 2 weeks before something happened, and that's a lot of risk. You know, we hadn't really seen that behavior much, because when we get pullbacks in gold, we see very quick moves after the initial absorption. And so this played out perfectly. We did know that heading into 1305 to 1310 was going to be the ultimate area of resistance where bears are going to want to defend. And price got as high as 1309s, I believe. So, I mean, this is clean rejections off of our key levels. Right now, we're seeing a pullback off that zone. So, I would say that right now, bulls have an opportunity at 1280 to redefend and attempt to squeeze this thing into value, which is 1323.70. That's the early bull play right now, is 1280. 1280 is going to be very important. If that area doesn't hold, you have the previous week's low here to defend and try to squeeze higher. Because after this major push back into 1310s, bulls have gotten paid, at least patient bulls. So now pulling back would offer an opportunity for them to redefend and try for another push higher. And I would say returning price to composite VPOC would be the smartest move, 1323.70. So you could perhaps get 1280 up to 1323.70. Failure to hold 1280 opens up another round of weakness, which could finally bring this thing into 1200, the bottom of the key range here. Because remember, if this thing can't hold above the top of that key range, it drops back to the midpoint. And if it comes back and it can't get above the top, it usually drops across the range. So that's the longer term bear play, and it starts with pushing price back below 1280 after the initial defense into 1310. All right, let's take a look here at the NQ. The NQ here has had a recent rejection. Again, The NQ continues to trade in an expanding nature. We've seen this thing wiggle up and down and up and down and up, right? So this recent move brought us above 4,900, and again it was rejected. That brought us back against this range after prices failed to hold the recent low. That opened up the move for a retest here, 46.25. We haven't quite gotten there yet. We got a gap up and a pullback in a downtrending market. This could offer another opportunity to sell it for a push into 46.25 and take out these lows. Once you take out these lows, it could be an opportunity to fling this thing right back up toward new highs as this thing continues to trade in a range on highs, and that usually means to fade new highs, fade new lows. Since we haven't really tested those lows and we're pulling back, this thing has to prove that it can be bullish, right? So I think that starts off of a test of 47s here. Bulls have gotten a nice big pro gap up. Now it's about digesting that recent gap, and if bulls can defend a pullback into 47 or thereabouts, that could offer an opportunity to bring this thing back toward 48.06 half, which is MCV and the highest FOMC key level we have. So bulls want to defend 4,700 or thereabouts for a shot higher. If there's any failure here, this pullback, wherever it goes, could be an opportunity to sell it for new lows again. So right now, the early key zone is going to be 47.30. That's the FOMC level right now. Price is above there, and then you have the midpoint of the previous week's range, which is right here. That level just shy, about 47.40. That level right there offers an additional area to perhaps defend as well if you're a bear. All right, looking at the intraday time frame right now, one thing you'll notice about the intraday is after a major gap up, very similar to the ES, you usually see price digest that move. So it could be a fade new highs, fade new lows. And again, rejecting 47.40 here implies we could see a move to new lows. There's an LV in here, so if price gets into 47.05s, 4,700, and S3 here, you could be flipping it back up. So fade new highs, fade new lows right now, at least short term, and 4,700 is a big key level here for OTF bulls and bears to defend. All right, that's it for now. Let's see how this thing plays out heading into the new week of trading. Good luck and trade well.